One of the biggest mistakes people make when moving to countries like Canada or the United States is not taking their credit scores seriously early enough. And I get it. When you first move abroad, you're focused on more survival type of tasks like getting your documents in order, making sure you have a place to live, making sure you have found work, and starting to learn about the systems of the country that you just moved to. What many people don't realize is that your credit score quietly affects so many parts of your life in these countries. It can affect where you are able to live, how much interest you pay on loans that you have to take out for big purchases you may need to make, and sometimes even opportunities that you can qualify to get. So in this video, I want to break down what a credit score actually is, why it matters so much, and what I think every immigrant or newcomer should start doing as early as possible. If you've already moved abroad, I would love to hear in the comment section just one thing that you found about the financial system in the country that you moved to that you wish you would have known a lot sooner. If you're new here, my name is Busi, and this channel is about navigating life abroad more intentionally. From practical systems and financial realities to building a life that actually works for you long term. And today we are talking about something I wish a lot more immigrants understood a lot earlier, and that is credit scores. So, what is a credit score? Think of your credit score as your financial reputation. It's basically a number that helps lenders and institutions be able to determine whether this is a person that can be trusted to borrow money and pay it back responsibly. The important thing to understand is that in countries like Canada and the United States of America, credit is deeply embedded into how the systems function. So even if you personally prefer using cash or debit, your ability to access opportunities can still heavily depend on your credit history. The next thing I want us to talk about is something that I think a lot of newcomers can underestimate, and I have to say I was in this bucket when it comes to credit scores and finding a place to live. I want us to talk about why credit matters so much in countries like Canada and the United States of America. A good credit score can help with finding apartments or a house to rent, getting lower interest rates on those loans that you need to purchase something, even something like getting a phone plan or signing up for utilities. So having a good credit score can help with a number of things as I just listed, and having a bad credit score can make your life a lot more difficult than it needs to be. The biggest mistake I've seen newcomers or immigrants make after they've moved abroad is taking too long to start intentionally building their credit score. A lot of immigrants come from countries where credit may work a bit differently, or it may be used in a different way than it is in these countries, and it also may be that people are just coming from countries where cash is used a lot more than credit, so they underestimate the need to actually build their credit score after moving to a country like Canada or the United States of America. There are immigrants who may avoid having a credit card at all, thinking that it's the financially responsible thing to do, and ironically, that can actually slow down your ability to build a strong financial profile in countries like Canada or the US. The key is to not avoid credit, but to learn how to use it responsibly. And this is a good segue to talk about the things that affect your credit score so you can start building your credit score knowing what matters if you're trying to intentionally build a strong credit score. The most important thing is making sure that you are paying what you need to pay every single time before the due date. Late payments can damage your credit score a lot. Make sure you're paying your bills on time every single time. If you find that you are someone who can forget to make payments, even setting automatic payments for the minimum payments can help you not miss your payment deadline, which could help you not affect your credit score in a negative way. The next thing you want to make sure you are on top of is your credit utilization ratio. Your credit utilization ratio is essentially how much of your available credit you are actually using. So say for example, you have a credit card and you have $1,000 that's available for you to use on that credit card. If you are using $900 of that $1,000 balance that's available to you, you are seen as someone who is very high risk because you're using 90% of the available balance on the credit that you have access to. You generally want to keep your credit utilization below 30%. So if you have $1,000 on the credit card, you want to make sure you're using less than $300. Even less than that is actually more beneficial. But if you have to get to that point where you're using the most on those cards or the available balance without negatively affecting your credit score, try and keep it below 30% as much as you can. Another important factor to consider when it comes to building your credit score is your length of credit. The longer you can show that you are able to responsibly manage credit, the better offers and rates you may get, which is another reason why it's important to start as early as possible after moving to a new country, whose systems heavily function based on the credit system. Even small responsible usage over time really helps build that history that can improve and boost your credit profile. For those of you who don't know, I moved to North America from South Africa, and credit is a thing in South Africa. And I remember one of the mistakes I made when I didn't know that credit history was even a thing was closing the very first account I had opened, thinking I'm building my credit profile. So I had opened a clothing account while I was still in university because I thought by the time I finish school and I'm looking at doing other things, maybe like purchasing my first car, having this card would help me start building my credit and actually show that I can use credit in a responsible way. But when I got to that point where I was purchasing my first car and I was getting ridiculous interest rates, I just felt like I didn't need this card to begin with. I don't really use it as a card that made sense for me to keep long term. But when I got to a point where I was trying to buy a car and I'm getting ridiculous interest rates and they're telling me, oh, you don't have a lot of credit, and that was true. And I, at the time, did not understand the mix of credit that you could have. And I just thought this one card that I had opened when I was still in university was going to help with something, but it essentially looked like it wasn't even doing anything based on the rate that I was getting at the time. And I closed the account, which was a mistake. I shouldn't have done that, but now I know better. And hopefully you don't go and close the card that has or gives you the lengthiest credit history on your profile, because it can make a difference. And as much as you can rebound from it over time, making sure that whatever card helps you have the longest credit history, keep it open and let it help you solidify the strong credit profile that you are building. Another mistake people make is opening too many new accounts in a very short space of time. Every time you apply for credit, there can be a hard inquiry on your credit report. If lenders see too many inquiries in your report in a very short space of time, it can affect your credit negatively, number one, but it could also signal maybe financial stress to lenders, because why are you trying to get so many loans or credit cards in a short space of time? Something might be going on that looks like a risk to them. So being mindful of when and how you apply for new credit is very important as well. Lenders also like to see that you can responsibly use a different mix of credit types over a long period of time. So when you're building your credit profile, it's important to think about the types of credit you're going to have showing in your credit report. It could be credit cards, it could be lines of credit, it could be personal loans, maybe a car loan or a mortgage. And this does not mean go and start opening a bunch of credit accounts that you absolutely do not need, but the credit mix is something that could boost your credit profile if you are using it correctly. So responsibly handling different types of credit can help strengthen your credit profile. We just spoke about a number of factors and things that you need to consider to make sure that you're building a strong credit profile that makes your life a lot easier when you move to countries like Canada or the US. And the great thing is that you don't have to keep everything up here. You don't have to remember everything all the time in terms of what you need to do. There are tools that you can use to support you in helping you to build that strong credit profile. If you are in Canada, one of the apps you could look at using is called Credit Karma. Let me pull up my phone so I can just speak through what you can see on Credit Karma so you know what to expect. It's a great app to help you track your score, monitor what's on your credit report, and make sure that you're making all the right moves to help your credit profile tread in the direction that you would like it to. So when you get on the app, you will see your credit score, and you'll also be able to see build factors. So Credit Karma gives you a view into some of the things that you could do to help increase or improve your credit score. They can help you keep track of your payment history and how that's looking, your credit utilization, if you have any derogatory remarks which can impact your score negatively. So this is if you would have any debt that maybe you weren't paying and it went to collections and it's now showing on your record, you'd be able to see that on here if it's something that is taking place with your credit and you don't find out that there's something negative on your profile that might even be incorrect when you are trying to get new credit for something. You also get to see what impacts your credit through Credit Karma. So the three factors that I just mentioned, which are payment history, credit utilization, and derogatory remarks that you can see on Credit Karma, are factors that are shown as having a high impact on your credit score. So when I said you don't need to guess and keep things in your memory just to remember how or what impacts your credit, Credit Karma can help you with keeping track of that. So high impact is your payment history, credit utilization, as well as derogatory remarks. Medium impact is the hard inquiries, so the things that we've spoken about. But hard inquiries are listed under medium impact as well as your credit age. And then low impact is your accounts overview. So how many accounts do you have open? How many accounts do you have closed? And it says these factors have less effect on your score than high impact factors, but it's still worth checking if there's more you can do, because if you can do something to improve your score, why not do it? And if you are in the US, Experian and TranUnion are apps that you could get to help you monitor your credit profile, and you can do this directly from your phone. I have both apps, and you may notice that different credit bureaus, so if you're looking at Experian or TranUnion, may have a different score, a different credit score that they're showing, and that is because they use a different model for how they calculate that credit score, and they also may pull data at different times, so your credit score may not look exactly the same on both of those. That is not something that should be alarming if you see that when you look at your credit score or whatever other credit bureau you are pulling a report from. Now, if you go on the Experian app, again, you are able to see your credit score, and it also gives you the option of being able to see your scores in all the different credit bureaus, so Experian, Equifax, or TranUnion, being able to see that in one place. And if you get on the TranUnion app, you'll also notice that you are able to add Equifax and Experian and be able to see everything from that one app. So the tools I just shared can help you track your score, monitor any changes on your credit profile, understand the factors that contribute to your credit score, and they can also sometimes help you detect if there's any suspicious activity or fraud that could be taking place. Understanding how the financial systems work in the countries that you move to can help you strategically and intentionally use credit in a way that benefits you and actually improves your life. Instead of getting into a place where you are hurting yourself financially and are not even aware of it because you haven't taken the time to learn about the system systems that govern how things run in the countries that you are or have decided to move to. And I just want to make something very clear with this video. This is in no way saying move abroad and start getting into a whole lot of debt because you're trying to build your credit score. You need to build your credit profile in a responsible way to make your life easier. So if you're moving abroad, maybe you've already moved or you're planning to move abroad, the best thing that you could do for yourself is to start learning about the systems in that country that you are planning to move to or have moved to already.